And a very happy Thanksgiving to you.
Happy Thanksgiving.
We know your day is probably pretty packed, so we're going to keep this deep dive tight and really hyper-focused.
Yep.
Our
Go.
mission today is simple. We want to just pull out the most critical developments from the last 24 hours in the Bitcoin market. We're talking institutional flows, some corporate shifts, and regulatory signals.
It's a very, very targeted look at how the smart money is reacting to all the recent volatility.
And the answer is pretty telling.
It really is.
Okay, so let's just dive right into the price action. The big takeaway is that Bitcoin staged a technically significant rebound.
That V-shaped recovery.
Exactly. Traders call it a V-shaped recovery. After that sharp drop from its high near $126,000 last month, it has now, strongly reclaimed that psychologically crucial $90,000 level.
And for anyone listening who isn't steeped in all the market jargon, a V-shaped recovery just means the price bounced back as fast and as steep as it fell. It's a sign that really aggressive buying just showed up right at the low point, completely turned that bearish momentum around.
But the price is only ever half the story. What about the institutional backbone? Is the money still flowing in?
It is, and what's fascinating here is that the institutional commitment seems rock solid. U.S. spot Bitcoin ETFs. They just recorded their second straight day of positive net inflows.
Wow, okay.
Over $20 million came in on Tuesday alone. It just confirms the whole thesis.
Right.
Institutional players saw that drop as a buying opportunity.
Not a signal to capitulate.
No, not at all.
And that signal gets even louder when you look at who is now entering the ring. Rowe Price. I mean, this is a massive top-tier active asset manager. They just filed a proposal.
For an active crypto ETF.
An active crypto ETF.
Yeah, and if we connect this to the bigger picture, this is a major vote of confidence.
Yeah.
Look, it's one thing for a firm to offer passive Bitcoin ETF. They're basically just selling you a commodity. But Rowe Price is proposing an active fund, one that will trade a whole basket of assets, Bitcoin, Ethereum, Solana, others.
Which means they believe there is enough structural inefficiency, enough alpha to be generated through constant active trading.
Precisely. It legitimizes these assets way beyond just being passive stores of value. These managers are telling the world, we can generate excess returns here.
Because this market is here to stay.
Exactly. And we have the expertise to navigate it.
That brings us directly to MicroStrategy. They're the biggest corporate holder of Bitcoin, and they just made a massive strategic move.
A huge one.
They transferred nearly 60,000 BTC, that's valued at over $5 billion, from Coinbase Prime over to Fidelity Custody.
Which, it raises the obvious question, why the big move now?
Right.
And it's a classic prudent risk management play. You just never want all your eggs in one basket.
So they're just diversifying their counterparty risk.
Diversifying away from a single provider like Coinbase Prime. But it's also where they moved it.
To Fidelity, a legacy finance giant. Why is that destination so important?
Because Fidelity is a crucial bridge. It's a bridge to the traditional financial system. For a corporation the size of MicroStrategy, dealing with banks, getting credit, any future funding, it all becomes immensely easier when your treasury is held by a provider who already has deep roots and regulatory ties with Wall Street.
So this move is signaling that the asset class itself is demanding truly institutional-grade infrastructure.
It has to have it to support corporate scale. That's the message.
So what does this all mean for you listening?
Well, the reports show a market that's really consolidating its institutional foundation. It's using major legacy players like Fidelity, and its whole financial structure is maturing.
And this is all happening even as it faces global regulatory challenges.
Right, like Spain's recent proposal to tax crypto gains at an extremely high rate, up to 47%.
We've covered a lot of ground pretty quickly here. For you, I think the key takeaway is that the infrastructure supporting the biggest players in Bitcoin is professionalizing and fast. We really hope you have a relaxing holiday filled with good food and great company.
Absolutely.
And as you enjoy your day, here's one final thought to mull over. We've seen Australia adopt a sort of friendly, regulated model for digital assets, trying to integrate them smoothly. So on your own time, consider which jurisdiction the collaborative approach of Australia or the highly taxed, more restrictive environment of Spain will ultimately dominate the future of the global Web3 industry. Happy Thanksgiving.